Hello and welcome to the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Thor Explorations, traded on the TSX.V under the ticker THX and on the OTC markets under the ticker THXPF. I'm joined today with President and CEO of Thor Explorations, Segun Lawson. And Segun, it's great to get you on the show to get an update on Thor. We saw some news that was just out today, and that is that your operations update from Q1 is showing some big improvements. I want you to, before we dive into the operations from the first quarter, though, just remind people of 2023, because it was a mixed year. You had messaged based on the definitive feasibility study that there was going to be a period of the mine sequencing mid-year that was going to be a little lower grade. You made it through that period. You actually outperformed, came out the other side, and you've done some big mill improvements. So before we dive into Q1, let's just recap last year, 2023.
Hi, Shad. Yeah, thank you very much. Good to talk to you as usual. Yeah, so to dive into 2023, as you rightly say, as per the mine plan, I don't know if you remember or recall our DFS, our target production as per the DFS should have been around about 72,000 ounces. We delivered 85,000 ounces versus the DFS. And that was all because operationally it was going to be challenging. We always knew just the geometry of the ore body. We were going to have this big pushback of mining waste and this western wall to access the ore body as it plunged to the south. So we've managed to do that. But, in parallel with that, we made certain upgrades to the plant to improve the efficiency as well. And that resulted in a corresponding buildup of golden circuit. We have a high amount of golden circuit, a high value of gold in the circuit, which should be drawn down now the plant upgrades have been completed. What I take a lot of comfort in and what we're really happy about as a management team is that, since the completion of these upgrades, we've seen in the first quarter, we've already started to draw down on this gold in circuit, and we aim to continue to do that throughout the course of the year. So, our guidance is maintained, 95 to 100,000 ounces. Our costs at 1,100 to 1,200 ounces remains the same. And we expect to draw down that gold and have a resting level of about 1,500 ounces of gold in circuit on an ongoing basis going on from there. And this has all happened whilst there's been a rise in the gold price. So, we've also started generating more cash than budgeted. We've made a very large payment to our senior lender, $8.2 million. Our remaining debt is just $15 million. That will be completely deleveraged this year. And we are very well positioned now with a performing plant, and the pit has been opened up. Given where the gold price is now, we also have the opportunity to re-optimize the pit and eat into some of what was designed as underground material as open pit at profitable levels as well. So we're working on that as well. So, we're happy with how we performed last year. We're very well positioned now. We've had a good start to the year. And, we're looking at this continuing through the course of this year.
Well, Segun, those are a lot of net positives because the golden circuit that you've held on to, now you have a higher gold price backdrop. So that's going to work out to your advantage. It's almost like you saved it away for a better day. You got the pit opened up. You're now, like you say, able to go down a little deeper in the pit because of the gold price. And additionally, you've set up the mill for success moving forward. Let's dive into the Q1 numbers, though, that you just put out. And give us the key operational highlights, some of the key improvements, some of the areas that you think will stay on trend as you blast into 2024.
Yeah, look, I think three things to look out for. Number one is, the grade is picked up versus the Q4. So we had a milled grade of about 2.85 grams per ton. We've built up a healthy stockpile, which is, about 30,000 ounces. In that stockpile, there's 6,000 ounces grading at 4.1 grams per ton as well. So we're very well set up in that respect whilst the mining is ongoing. And then, we have in the process plant itself completed this upgrade as well, which seems to be performing well. So it's trended well through January, February, March as well. But I think the key points are looking at the grade, the fact that we have a good mill feed now, and we continue to perform.
Maybe explain to people that maybe listening to this for the first time, because there's a lot of new interest in the gold sector. There's a lot of new interest in the gold producers. you brought a mine into production in Nigeria where there had never been a mine before, but to have costs down at 11 or 1200 compared to a lot of the seniors that are seeing their costs creep up to 1300, 1400. I've seen some mid tiers and seniors that even have 15 to 1600 all in sustaining costs. What are you doing to keep your costs down? How have you dealt with inflation in the last couple of years?
There are a number of factors that have worked in our favor. We have an ore body that's, high grade versus a lot of the general global cost curve, should I say. We have the metallurgy of our ore body is very, very simple. We have a high percentage recovered just from gravity alone. Our big fuel costs with our fleet is obviously diesel, but to power our plant, we use diesel and compressed natural gas, which is a lot cheaper than diesel as well. So there are a number of factors that have kept our costs low. But, I wish I could say there was something more strategic. However, we're just extremely fortunate with the kind of ore body we have in terms of metallurgy and recovery.
Yeah, I think that it just speaks to the operation savvy of your team too, that you've done a great job all the way from exploration to development into production and then executed year after year, even through some of the challenging areas. And now I think you're really set up to not only keep production maintained and hit your guidance, but also you've mentioned a couple of times that you're looking for satellite deposits. You're looking for other areas that you could bring into the mine plan to extend mine life. Maybe speak to the exploration upside that you have at Segilola, not just at the mine, but around the mine and maybe on your land package.
Yeah, look, we're looking at exploration upside in terms of satellite deposits, but also in terms of the underground. We have, a global resource that's already shown indicated and inferred material underneath the pit, that's actually material to what we're producing now. And like I mentioned earlier on this call, given where the gold price is now, I believe our DFS was done at a $1,600 gold price. So given where the gold price is now, $700 above, even though our costs have gone up as well. But, there is a lot of scope to re-optimize the pit. And prior to transitioning to an underground, there are a lot of easy ounces to be produced from just increasing the size of the pit. So that's something that we're studying at the moment as well. But, we continue to look at the near mine exploration. We're generating more cash now. We're getting very rapidly deleveraged. We have the opportunity to look at additional open pits that are within trucking distance of the plant. We've been doing this now for a year in terms of the rate at which we're doing it. We're upping it this year as well. And we've had some small wins already, which we can aggregate into a study to see how that gets to the mine. Some small wins, 10,000 ounces there, 20,000 ounces here. But we're still looking for that larger win, which we believe will come through the continued systematic exploration we're carrying out now. So it's twofold. We think there's a lot more ounces in the underground. We've proven it to some extent in terms of the global resource. We think there's ounces in the underground that could be brought into the open pit, which we're carrying out our optimization studies on. And we think there's near mine exploration potential.
If you did decide to make a decision down the road to do underground mining, what kind of CapEx would the company need to look at? I know it's still very early days, but if you keep having success drilling at depth, what would that look like? Would it be something where you can use the revenues from the mine to offset some of that? Would you use your same debt partner where you've been paying down the debt? To speak to what a longer term vision of the development plan going into the underground would look like.
Yeah, look, in all honesty, it's far too early to say. However, we did do a preliminary economic assessment on a portion of the underground, which had 100,000 ounces, where we would produce about 33,000 ounces a year to supplement some of the open pit. That was a $12 million decline. But, that was a preliminary economic assessment. It's still early days. We believe the underground resource is much bigger than what we had in that economic assessment. We have a target to drill out the underground, to try and extend the mine life by, 3 to 5 years. We're bringing forward that underground drilling into Q2 this year. So hopefully we should have some news flow for the market through the course of this quarter.
How many meters are you drilling at the Segilola project or in Nigeria in general, as far as the gold-focused exploration?
So we have a number of passes to determine whether we'll move on to the next phase. We have an initial first pass of around about 5,000 meters on the gold.
The reason I asked the question that way is that you're also exploring for lithium in Nigeria. So maybe just speak briefly to that program where you're also have some other land tenements that are prospective for lithium mineralization.
Yes, we do. And we've added to our land package. We drilled last year. However, after drilling last year, we took a step back and tried to work up our drill targets more systematically. So it wouldn't be a stop-start exploration campaign in terms of drilling. And, we're pleased with how things have gone over the last 6 to 9 months. We've worked up a number of targets, including some anomalies that stretch for a number of kilometers, and seen some lithium bearing, mapped out some good lithium bearing pegmatites in our oil project. We're starting drilling there as well in Q2. The drilling there, we have a budget for that. That's going to be about 4,000 meters. And again, we look forward to updating the market with that. We're still very encouraged by that.
Yeah, it's just another exciting value driver for the company, and it speaks to the respect that your team has generated in Nigeria as being a first mover in the country. But let's shift countries here over to Senegal, to the Douta Project. You've done a lot of exploration work at this project the last few years. You've upgraded the resources, but then just recently, you've also increased your land position around it. And so I'd love you to speak to the recent acquisition you did in Senegal to beef up the land position around your Douta project.
Yeah, the key license we've picked up is contiguous to our pre-existing Douta license, which we've creatively named Douta West. We are currently carrying out a preliminary feasibility study on our Douta main project, and those work streams have been ongoing for a while and have been really delayed for two reasons. Number one, more difficult metallurgy than we expected in the fresh, and also number two, logistical reasons, moving samples around the world to have various tests done for the process flow sheet. However, one thing that has become very apparent was the oxide component of the Douta resource has been extremely easy to recover. And I don't know if you remember our drill results, we have a large number of wide oxide intersections right from the surface. So when we picked up this license, first thing we noticed was the Makosa tail extended beyond our southern boundary, and there were other anomalies, in the Douta West license between ourselves and Massawa. Our strategy is here is to continue to drill out the oxide resource whilst our PFS is going on and try and get that to, north of 500,000 ounces. Our global resource is 1.78 million ounces. We believe getting an oxide component to that north of 500,000 ounces. And it puts us in a very strong position in terms of even having a phase one of the project that's only oxide and generates easy free milling gold from the oxide. So that's our strategy. We've actually gone as far as, since acquiring the licenses, gone further to delineate these drill targets. We've cleared the drill pads. We are mobilizing the drill rigs as I speak now and hoping to start drilling in the next couple of days, both on Douta and Douta West. So there should be drilling news flow coming from Segilola near mine exploration, Segilola deeper drilling, Nigeria lithium, and from Douta and Douta West, starting this quarter and carrying out over the next 6 months.
All right, so yeah, drilling on all fronts there in both countries and at multiple projects. Now, just to follow up on the Douta and the Douta West, about how many meters do you expect to drill, and what will the balance be between Douta and the Douta West? And then what targets are you working on still at the Douta project?
So at the Douta project, we have, if you remember, Makosa East as a target. We have other targets along strike to the north of the project, which we're going to do some white space drilling in. We're going to extend Makosa tail to the south. And Douta West, we're drilling 3,000 meters of shallow holes, just 50 to 60 meter holes, targeting the oxides as well. So the total drilling in Douta is going to be around about 5,000 meters.
As far as the big picture, I know it's still early days, but you are getting closer with the economic studies at Douta. Do you envision it being similar to what you're seeing at Segilola, in that you start open pit with the oxides and then longer term, you do have an underground component to get into that fresh rock?
Yes, certainly. I think, even if we were to use very basic parameters as, 100,000 ounces per year, that's getting a minimum oxide component of 500,000 ounces, is an initial 5-year mine life that would pay off the capex for, a phase two in the fresh, should I say. But, we're doing the oxide drilling and the PFS in parallel and hopefully incorporate the two into one. And yeah, look, we're excited. One thing's for certain, there's a lot of gold in that region on our permits. There, we've never closed this resource out along strike or at depth. We've added ground with some very strong gold anomalies. We're excited about the drilling coming up on Douta West and the other targets.
And then just one more question as it relates to this longer term picture in Senegal. Maybe just speak to the strength of your operations team already proving their worth in Nigeria, but being able to take that talent and expertise and move it over there, as well as some of the partners you have on capital financing and then social governance and permitting, how that all ties into the mine build that would take place in Senegal using all that experience you learned in Nigeria.
Yeah, look, we're happy that we've gone through the experience pretty recently. We have our largest shareholder, the Africa Finance Corporation, who's a long-term supporter of ours and has the ability to finance whatever builds we look at. And obviously that combined with the fact that we're generating cash, should make it a much easier prospect to finance. Not only that, the fact that we've repaid them, they provide a number of financing instruments to us. So not just debt, there was a stream which we paid and obviously repaying the debt as well. So we have an excellent partner in the African Finance Corporation. We also have an excellent partner in our EPC contractor, who's also a small shareholder of ours, that have built the Segilola mine on time and within budget. They've been to our Douta Project and been to the ground there, also working alongside us on the preliminary feasibility study work streams as well, as they did with Segilola. So, we've been through the process with a mine in Nigeria. We think we're very well positioned to go through the process with the mine in Senegal as well.
All right. Well, we'll wrap it up there for today, Segun, but it's a pretty exciting update because you've got so much exploration work planned for this year in Nigeria, in Senegal, at both projects, at Segilola, at depth, looking for some of the satellite pits, the Nigeria lithium, and then also not just Douta, but now Douta West. So an exciting growth-oriented gold producer with a lot of exploration upside, operating in multiple jurisdictions. And if people want to follow along with the news at Thor Explorations, definitely click on the link below this interview. It takes you over to the company website to the news section. Segun, keep us posted as we get more news out from the company. We'll get you back on the show for an update and looking forward to our next conversation.
Great. Thank you so much, Chad.